So Helena, thanks for joining us today.
Thank you very
So we're
much.
here to talk about Germany. How would you say the hotel fundamentals in Germany are stacking up against other European markets?
So in 2025, we've seen a slight downturn in the market performance in Germany. So we've seen a decrease in RevPAR of 1% roughly. That was mainly driven by a decrease in ADR of 2%. And so overall, that might seem like a negative, or that might seem like something why you should not invest into Germany. However, I think it's always important to put it into perspective, right? And so 2024 was a particularly strong year because we had the European Championship, we had like large-scale events like Taylor Swift, Adele concerts in Munich. And so we already came from a record year. So now with 2025 being almost stable, I think we are at a very good level. Looking ahead, we have a supply pipeline of roughly 3%, and that is more or less in line with the other European core markets. And I believe the demand will continue to pick up. So I think the market fundamentals will remain and will continue to be very strong. And at the same time, you have a slightly better return expectation in Germany. So I think that kind of levels out this slight downturn in the market performance.
And if we're looking at where investment's coming from, is it mostly domestic or is it some overseas? Where is the capital being sourced for hotel investment?
So in terms of type of capital, Germany has always been very much driven by the institutional capital. That was pre-COVID. And then COVID came and we saw a lot of the international private equities coming into the market. We also saw a lot of owner-operators entering into the market, especially the ones that kind of were able to generate capital from their operating business, most of which come from the southern European markets, are now actively deploying into the real estate, and a lot of that is going into Germany. So that is definitely something. And then kind of aside from the type of capital, I'd say that it's also capital that has historically more looked at other asset classes. So a lot of investors have portfolios that are very office heavy. And now with kind of the potentially more structural changes in the office market, hotels is benefiting from that because a lot of investors are now really looking for diversification possibilities, and then hotels or commercial living overall is a very good alternative.
And if we're looking at the hotel sector specifically and like drilling down into what type of hotels, which ones do you think are of most interest at the moment? What scale, on the chain scale, what are we looking at?
Well, that is very similar to other European markets, I'd say. So it's very much focused on luxury, upper upscale. And other than that, I'd say it's not so much focused on the segment, but it's more focused on the efficiency and honestly also on the rent cover ratio. Because right now, especially with the increasing costs, it's really important to make sure that you have good operations and simply hotels that work. And in terms of geographies, I mean, we are in Berlin today, and Berlin really remains to be one of the key markets in Germany. In addition to that, I'd say it's probably Munich and Hamburg that are most in demand. And all of those three markets have a very good very well balanced demand mix. So it's national and international, and it's leisure and business. And those are factors why I believe that especially those three markets will remain to be key markets for the investors looking for hotel investments in Germany. In addition to that, we see that Cologne is very much on the radar at the moment because the market fundamentals in Cologne are just really strong.
You kind of touched on it before there about the importance of operational efficiencies and stuff. How important is it at the moment with rising costs to make sure those things are under control? And the asset management strategy, can you talk a bit about that for hotels?
Germany has always been and still is a very much lease-driven market. And especially historically, we've looked at a lot of fixed leases. Now, especially since the beginning of COVID or since COVID, we saw that those fixed or those leases are becoming increasingly hybrid. And with an increasing part of a variable income, the investors need to be able to understand this variable or this overall income, this variable income, in order to essentially also capitalize on it, right? And so I think it's becoming of greater importance to understand the operations. But then overall, it of course depends on the strategy. I mean, this is for leases, and they'd say, yes, it's becoming more important, but still it is potentially somewhat limited. And then once you go more into the value add segment, you really you need to understand the operations. I mean, especially with the increasing costs and with kind of the entire P&L becoming more tight.
And finally, looking ahead 12 to 18 months, is there anything you think that needs to change in the market to unlock more transaction volumes?
We need more product at the right pricing. Well, that's simply said, but I do believe that for the core segment, the market, or we know quite well where the prices sit. And I think the buyers and vendors have a similar understanding of it. But then for the core plus and value add segment, that becomes a little bit more tricky. But we need those core plus transactions in Germany as well for the volume to significantly pick up again. So I think there's still some educational work and some kind of more benchmarking, etc., to do in order for that to pick up again.
Fantastic. Helena, thanks very much for joining me today.
Thank you very much, Patrick.